Hello friends, welcome to LU Update. This is the second part of your most important MCQs for semester exams for the subject Income Tax Laws and Accounts. In this video, we are going to cover the remaining MCQs which are important for your semester exams. Starting with the very first MCQ, the question asks, monthly pension on retirement is. Now what is your monthly pension on retirement? Exempted income, income from other sources, taxable income under salary head, or casual income. Now, monthly pension which you receive or monthly pension received on retirement is considered taxable income under salary head. It is treated as a part of individual's salary income and is subjected to tax as per the applicable income tax rates. Pensions are generally taxed under the head of salary in the Income Tax Act, and they are included in the individual's total income for the purpose of calculating income tax liability. The tax treatment of pension income may vary based on factors such as type of pension, rules and regulations, and specific country. Therefore, the correct answer is option C, that is taxable income under salary head. Now moving on to next question. What percentage of income from compensation on disaster is exempted from tax liability? Your options are 100%, 75%, 50%, and 25%. So the income received as a compensation on account of any disaster is fully exempted from tax. The Income Tax Act provides for this exemption to provide relief to individuals who have suffered losses or damages due to disaster. When an individual receives the compensation as a result of any disaster, such as natural calamities or accidents, the entire amount of compensation received is exempted from tax. This means that the income from compensation is not included in individual's taxable income and is thus not subjected to income tax. So the correct answer is option A, that is 100%. The next question we have is the amount unutilized in capital gain account scheme for which exemption claimed under section 54 shall be treated as long-term capital gain if your options are 2 years have expired from the date of transfer, 2 years have expired from the date of deposit, 3 years have expired from the date of transfer, and 3 years have expired from the date of deposit. So the correct answer is option C, that 3 years have expired from the date of transfer. When the amount unutilized in capital gain account scheme for which exemption is claimed under section 54 shall be treated as long-term gain, तभी किया जाएगा जब 3 years have expired from the date of transfer. Only in this case shall the amount unutilized in capital gain account scheme for which exemption was claimed under section 54 would be treated as capital gain. Moving on to next question. The income from sale of machinery used in business is treated as income from business and profession, short-term capital gain, long-term capital gain, and income from other sources. So the correct answer is option B, that is short-term capital gain. आपकी जो भी मशीनरी आप यूज करते हैं बिजनेस में, if you sell that machinery, so this is not going to provide you a very long-term capital gain in any sense. So this kind of income from the sale of machinery used in a business is always treated as short-term capital gain. It is not included as income from business or profession. You are not doing any business activity. Business activity refers to any activity which occurs on a regular basis. You are not selling your machinery on a regular basis or continuously. Neither it's a profession. It's not a professional way of earning income by selling machinery. Professions are like some professional practices like CA, CS, doctors, engineers, architects, etc. Selling of machinery is not any profession, so income from business and profession is not there. long-term capital gains are not there, and income from other sources are not there, because you know from where you're getting the income, that is from the sale of machinery which was used in business. So the correct answer is option B, short-term capital gain. Now moving on to next question. Surcharge is payable by an individual where the total income exceeds. Now when is surcharge paid by an individual? At what point when the total income exceeds? Your options are 10 lakhs, 25 lakhs, 50 lakhs and 1 crore. So the correct answer is option C, that is 50 lakhs. The moment your income exceeds 50 lakh rupees, you are liable to pay surcharge to the government or tax authorities. Now again we have this list 1 and list 2, and we have to match the components of list 1 with those of components of list 2. The following are the options given. So, residential status of an individual, agricultural income, house allowance and gratuity have to be matched with list 2 components having section 10, subsection 13, clause A, section 10, subsection 10, section 6, section 10, subsection 1. Now while matching these, the correct option that we get is option B. Now option B, why it is correct? It is correct because residential status जो आपका होता है, residential status of an individual, it is mentioned in section 6. Talking about agricultural income. Now agricultural income always is agricultural income is mentioned in section 10 subsection 1. The house allowance is mentioned in section 10 subsection 13 clause A, and gratuity is there in section 10 subsection 10. So with this the list has been matched and the correct answer is option B. Now moving on to next question, that is question number 44. The income of a minor shall be added to the taxable income of his guardian if the income is more than 1500, is rupees 1500, all the income of the minor irrespective of the amount, and all the income of the minor will be income tax free. So the correct answer is when the income of a minor is more than rupees 1500, that is option A. So if the income of a minor exceeds rupees 1500, then in such a case the income of minor shall be added to the taxable income of his guardian, that is his parents. Now moving on to next question. Percentage involved in production of sale of tea, agricultural income is considered to be. Now your options are 10%, 40%, 60% and 90%. So the correct answer is option C, that is 60%. Now according to provisions of Income Tax Act, in the case of an individual engaged in business of growing and manufacturing tea in India, the portion of agricultural income considered is 60% of the total income. It was discussed in previous video as well that 60% is always considered as agricultural income in case of tea manufacturing in India, and the remaining 40% is considered as non-agricultural income. Now, paid by government of India to a citizen of India for rendering services outside India is exempt under section 10 subsection 7. Your options are salary, allowances and perquisites, both A and B, and none of the above. So the correct answer is option B, that is allowances and perquisites. So all the allowances and perquisites which are paid by Indian government to any citizen of India for rendering his or her services outside India is exempted under section 10 subsection 7. Now these allowances and perquisites can be your accommodation in the foreign land or traveling vehicles, etc. Any kind of allowances or perquisites which have been provided by the Indian government to any Indian citizen who is required to be posted in a foreign land for rendering his or her service is exempted under Section 10, subsection 7. Now moving on to next question, that is question number 47. Gratuity is taxable under the head of income from, your options are rent, house property, salary and profession. Now the correct answer is option C, that is salary. Now gratuity is a statutory payment made by an employer to an employee in recognition for his or her long and meritorious services. That's when you are paid the gratuity. It is considered as a part of the salary income of the employee and is taxable under the head income from salaries. Therefore, the correct answer is option C, that is salaries. Now moving on to next question. Which of the following sections of Income Tax Act deals with the interest, royalty fees, fees for technical services payable outside India or payable to a non-resident? Your options are Section 40A, Clause 1, Section 40A, Clause 2, Section 40B, Section 40B, Clause 2. So, the correct answer is option B, that is Section 40A, Clause 2. Now, Section 40A, Clause 2 of Income Tax Act deals with the disallowance of expenses related to interest, royalty, fees for technical services payable outside India or payable to a non-resident, and tax has not been deducted at source or paid, then such expenses will be disallowed for tax purposes. Now this section 40A, Clause 2 ensures that the tax deduction or payment obligations are fulfilled when making the payment to non-residents for interest, royalty, fees for technical services, etc. If the tax is not deducted or paid, the expenses will be disallowed, resulting in higher taxable income for the payer. Now, the entertainment allowance for non-government employees are option A, fully exempted, fully taxable, partially taxable and fully exempted in specified. So the correct answer is option B, that is fully taxable. So any non-government employee who is allowed any kind of entertainment allowance, that allowance is fully taxable under Income Tax Act 1961. Now question number 50. Certain donations are deductible from GTI under section of Income Tax Act. Now which section allows the deduction of certain donations from GTI? That is gross total income. Now your options are 80G, 80D, 80C and none of these. So the correct answer is option A, that is 80G. Now 80G provides donations which are deductible from GTI under Income Tax Act 1961. Now these donations can be for specified funds, charitable institutions and organizations, etc. and they must be made to entities approved by government to qualify for the deduction. It is available to both for individuals and the companies, subject to certain conditions and limits, and the amount of deduction varies upon depending the type of entity and the prescribed limits mentioned in the section. Now next question, which section of Income Tax Act relates to claim deduction for premium paid for health insurance? Your options are Section 80C, Section 80D, Section 80E and Section 80G. Now, Section 80D of Income Tax Act 1961 allows individuals to claim a deduction for the premium paid for health insurance policies. Now, the deduction is available for both individuals and Hindu undivided families. The deduction limit under Section 80D varies based upon the age of the individual or family members covered by the health insurance policy, etc. And it also takes into account whether the insured individuals are senior citizens or not. So the correct answer is option B, that is Section 80D. Now, in which section of Income Tax Act the sum received by a member of HUF will be exempted? Your options are Section 10 subsection 5, Section 10 subsection 4, Section 10 subsection 2 and Section 10 subsection 1. So, Section 10 subsection 2 of the Income Tax Act provides an exemption from the sum received by a member of HUF. According to this section, any amount received by a member of HUF is not considered as income and hence it is exempted from the tax. It is important to know that the exemption is specific to the sum received from the HUF and does not cover other type of incomes or assets. Therefore, the correct answer is option C, that is Section 10 subsection 2. Now, what is exempt income? Your options are Provident Fund, lottery, horse races and all of these. So the correct answer is option A, that is Provident Fund. Your Provident Fund is included or considered as an exempt income under Income Tax Act 1961. Now moving on to next question. Gratuity received by a government employee is. Now, the gratuity received by a government employee, it is exempted up to 3,50,000, exempted up to 10 lakhs, fully exempted or fully taxable. Now, any gratuity received by a government employee is fully exempted. That is option C. Under the Income Tax Act 1961, tax-free incomes are mentioned in which section of the Income Tax Act? Your options are Section 80, Section 88, Section 10 and Section 2. So the correct answer is Section 10, that is option C. Now, Section 10 of Income Tax Act provides a list of incomes that are exempt from tax. These include various types of income such as agricultural income, certain allowances, perquisites and specified scholarships, etc. Therefore, tax-free incomes are mentioned in Section 10. Now, moving on to next question. That is, which of the following is correct in regard to interest and excess refund? Your options are interest rate is 1% per month, interest rate is 0.5% per month, interest rate is 1.5% per month and interest rate is 0.25% per month. So, the interest on excess refund is, your correct answer is option B, that is interest rate is 0.5% per month. Now, which of the following investment or payment is not eligible for deductions under 80C of Income Tax Act 1961? Your options are life insurance premium paid on life of spouse, life insurance premium paid on life of son, life insurance premium paid on the life of daughter, and life insurance premium paid on the life of sister. So the correct answer is option D, that is life insurance premium paid on the life of sister. Now in this question, you have to arrange the steps to e-filing of income tax return in correct sequence. So your sequence is register yourself, verify ITR 5, select the requisite form and fill form and upload. So your options are given and the correct option is option A. That is, at first we register yourself, then we select the requisite form. After that we fill the form and upload, and then we verify ITR 5. So option 5 is the correct answer. Now next question. The due date of first installment of advance tax by assessee other than the company is, your options are 15th of April, 15th of June, 15th of September and 15th of December. So the correct answer is option B, that is 15th of June. For the assessees other than the companies, the due date of the first installment of advance tax is 15th of June of the financial year. Now what is advance tax? It is the payment of income tax in installments based on the estimated income for the financial year rather than paying it all at once at the end of the year. The due dates for the remaining installments of advance tax are usually 15th September, December, etc. That is 15th of every month. Now moving on to next question. The rate of depreciation on intangible assets is. Your options are 20%, 25%, 30% and 15%. So the correct answer is the rate of depreciation on intangible assets under the Income Tax Act is 20%. That is option A. Now intangible assets include assets such as patents, copyrights, trademarks, license, etc. And depreciation is allowed on intangible assets based on their usual life. And the rate of 20% is applied to calculate the annual depreciation deduction. Thus, the correct answer is 20%. That is option A. Now, which income is tax-free? From the given options, which income is tax-free under Income Tax Act 1961? Your options are agricultural income, amount received from HUF, contingency income and all of the above. Your correct answer is option A. Agricultural income is exempted or tax-free under Income Tax Act 1961. Now deduction under 80C is available for investments in unit-linked insurance plan, LIC, statutory provident fund or all of these. So the correct answer is option D. All of these. Now deduction under 80C of the income tax is available for various investments and expenses. Some of them are like unit-linked insurance plans, LIC, statutory provident fund, contributions to public provident fund, national savings certificates, employee provident funds, etc. Therefore, correct answer is option D, all of these. Now, how can you file an income tax return in India? So, your options are www.gst.government.in, www.mca.government.in, www.incometaxindiaefiling.government.in and option D, none of these. So your correct answer is option C, that is Income Tax India Filing Government.in. That is where you can go and file your ITR return in India. Moving on to next question. What are the details required for filing income tax return? A PAN, Aadhaar, current address and bank details, income proofs and information about all the deductions claimed under Section 80, tax payment information such as TDS and advance tax payment, and option D, all of the above. So the correct answer is option D, all of the above. In order to file your income tax return, you need to provide your PAN card, Aadhaar card, current address and bank details along with your income proofs and information about the deductions claimed under Section 80. and tax payment information and TDS and advance tax payments. All these informations are required to be there for you to file your income tax return. So the correct answer is option D, all of the above. Now moving on to next question, that is, the return of income is to be furnished in. Now your options are ITN S 281, Form 26AS, Form 26Q, ITR 1 to 7 as the case may be. So the return of income in India is filed using different income tax return forms based on the type of taxpayer and their sources of income. The choice of ITR depends on factors such as the nature and amount of income, residential status and any other applicable exemption or deductions. Therefore, taxpayer needs to select the appropriate ITR based on their specific circumstances and then furnish the return of income by filing relevant details and submitting it to the income tax department. Therefore, the correct answer is option D, ITR 1 to 7, as the case may be, according to the kind of taxpayer, sources of income, etc. So, the correct answer is option D. Now, number of digits in a PAN card is. Options are 7, 9, 10 and 8. So, the correct answer is option C, that is 10 digits. There are 10 digits in your PAN card. Moving on to next question. To register and create account for e-filing of income tax, which is the required documents? Permanent account number of PAN, tax deduction account number, TDS certificate or Form 16. So the correct answer is permanent account number or PAN. In order to register and create an e-filing of income tax which is required, or which document is required, it is PAN card number or permanent account number, because it is an unique identification number assigned to a particular individual and entitles for tax purposes. And it serves as an essential document for various financial transactions and is mandatory for filing income tax returns. Now, the term casual income does not include. Your options are winning from lottery, winning from gambling, capital gains on sale of shares and receipts of money lying on road. So the correct answer is option C, that is capital gain on sale of shares. Now, casual income generally refers to income that is occasional or irregular in nature and not derived from regular business or employment opportunities. It typically includes income from sources such as winnings from lotteries and gambling, as well as unexpected and incidental receipts. Now, capital gain on the sale of shares, on the other hand, is considered as a capital transaction and not classified as casual income. Whereas winning from lotteries, winning from gambling and receipts of money lying on road, all these three are all casual incomes. You do not encounter them or find or win a lottery on a daily basis or win a gambling game or find money lying on road on a regular basis. Therefore, capital gains on the other hand, that is on the sale of shares, are a capital transaction. They are profits or gains arising from the sale of capital assets such as stocks, bonds or real estate. Therefore, the correct answer is option C, that is capital gains on sale of shares. Now, the tax loss donation to approved and notified associations for scientific research is allowed as. Your options are 125% of the donation, 100% of donation, 175% of donation and 150% of donation. Now, under section 35 AC of the Income Tax Act 1961, if a donation is made to an approved association or institution for scientific research, a deduction of 150% of the amount donated is allowed while computing the taxable income. This means that the donor can claim a deduction of 150% of the donation amount from the taxable income. Hence, the correct answer is option D, that is 150% of the donation. Now, which section of the Income Tax Act provides for aggregation of income? Your options are Section 14, Section 15, Section 16 and Section 17. Now the correct answer is option A, that is Section 14. Now Section 14 provides for aggregation of income under Income Tax Act 1961. Now set-off of losses is possible Your options are only from salary income, only from business income, from any source of income, and option D, none of the above. So the correct answer is set-off of losses is possible from any source of income. Now under the Income Tax Act, taxpayers are allowed to set off their losses against income from any other source. This means that if an individual or business incurs a loss in one source of income, they can offset that loss against income from another source. For example, a business loss can be set off against salary income and a capital loss can be set off against any other capital gain. Therefore, the correct answer is option C. From any source of income, set off of losses is possible. Now, tax authorities include all of the following except Central Board of Direct Taxes, Income Tax Officers, Assessing Officers and taxpayers. So, the correct answer is option D, taxpayers. Taxpayers are not included in the tax authorities. They are the ones from whom the tax authorities, that is the CBDT, Income Tax Officers and Assessing Officers, collect the taxes. Therefore, the correct answer is option D, the taxpayer. Now, moving on to next question. In income tax assessment, best judgment assessment refers to. Your options are scrutiny assessment, summary assessment, reassessment, and option D, assessment done in the absence of assessee's cooperation. Now, best judgment assessment is a provision under the income tax laws that empowers the tax authorities to make an assessment of a taxpayer's income and tax liability in case where the taxpayer fails to furnish the required information or documents or books of accounts, or where the taxpayer's books of accounts are found to be inaccurate or unreliable. Therefore, in such cases, the assessing officer relies on his or her best judgment to determine the taxpayer's income and liability based on the available information, external sources, or any other relevant factors. Therefore, the correct answer is option D, assessment done in absence of assessee's cooperation is referred to as best judgment assessment. Now, an individual receiving gift money over a certain limit, the amount received is treated as exempt income, capital receipt, deemed income, or no income at all. So, the correct answer is option C, that is deemed income. So, under the provisions of Income Tax Act, if an individual receives a gift from any person or entity exceeding a specified limit, a certain limit, then in such a case the amount is treated as deemed income. For example, the gift tax provisions which have already been abolished in India, but there are certain provisions that treat excessive gifts as deemed income for taxation purpose. Now, the deemed income from gifts is subject to tax and is included in the total income of the individual. The specific provisions and limits regarding the gift taxation may vary based upon the applicable provisions of Income Tax Act or any other relevant notifications or rules issued by the tax authorities. Therefore, the correct answer is option C, that is the deemed income. Now, in the case of HUF, the basic exemption limit is, now what is the basic exemption limit in case of HUF? Your options are 2,50,000, 3 lakh rupees, 5 lakh rupees and none of these. So the correct answer is option A, that is 2,50,000 is the basic exemption limit in case of HUF under Income Tax Act 1961. Now the head, income from house property includes. Now what is all included in your income from house property? Your options are rent received from a tenant, deemed rent, both A and B, and option D, none of the above. So the correct answer is option C, that is both A and B, rent received from a tenant and deemed income. Now the head, income from house property, includes both rent received from a tenant and deemed rent. Now rent received from a tenant is an actual rental income received by the owner of the house property, whereas deemed rent refers to the notional rental value of a property that is considered to be earned by the owner even if the property is not actually rented out or if it is self-occupied. So both these cases, both of them are included under the income from house property. Hence the correct answer is option C, that is both A and B. The next question is, sum of various heads of income is called. Option A, gross total income. Option B, total income. Option C, taxable income. And option D, adjustable income or adjusted income. So the correct answer is option A, that is gross total income. Now, the sum of various heads of income such as income from salaries, income from house property, income from business or profession, income from capital gains and income from other sources is referred to as gross total income or GTI. It represents the total income earned by an individual or entity before they deduct any deductions or exemptions. Therefore, the correct answer is option A, gross total income. Now, health and education cess is calculated on. Your options are total income, tax on total income, taxable income and agricultural income. So the correct answer is option B, that is tax on total income. Your health and education cess is calculated on the tax on total income under Income Tax Act 1961. Now the last question, which of the following donations is eligible for 100% deduction? Your options are PM Drought Relief Fund, National Sports Fund, Rajiv Gandhi Foundation and Jawaharlal Nehru Memorial Fund. Now, among these, which donation is eligible for 100% deduction? Your answer is option B, that is National Sports Fund. Any donation made to National Sports Fund is 100% exempt or eligible for 100% deduction under Income Tax Act 1961. So the correct answer is option B, that is National Sports Fund. Now with this, your most important MCQs for income tax laws and accounts have been completed. So these are the main questions which are most important, keeping in view your upcoming semester examinations. So please refer to them, and if there's any problem, please contact us. Thank you.